What is up, YouTube? All right, so this is going to be series 2 of Naked Forex, and this will be all on the 4-hour chart and then a little bit on the daily chart, but mostly on the 4-hour chart. So those of you that, I'll say why I use the 4-hour chart. So why I use the 4-hour chart is because the 4-hour chart to me is by far the best chart for swinging and looking for perfect trend structures for swinging, and also the fact that you get a new 4-hour candle every 4 hours. But if you take 4 hours times 6, that's 24 hours, and that's a day. So you get 6 4-hour candles in one day versus looking at the daily chart. Ooh, somebody trying to talk to me right now. But versus looking at the daily chart, because with the daily chart, you have to wait till the end of New York session is closed, and then trade, and then on TradingView, and then it'll open up a new candle when Sydney opens. So that's the only downfall looking at the daily candle. So with the 4-hour, I'm gonna start there here. We're looking at I'm looking at US 30 right now. What I'm looking at is pretty much a sell position. And my initial target to take profit, if I was selling it right now, looking for 27,600 right here, and then come target 27.5, and then come target 27.4. When I target something based on any time frame, I look at simplified numbers, even numbers, not odd numbers, even numbers. It's easier to estimate when you want to take profit, or if you decide you want to take at a stop loss position, or even entries. And so that's why it's crucial to understand where you want to have initial targets or taking profit, initial entry points, and exit strategies. So I'm hopping to US dollar to the yen. Based on this, I would just keep selling. Right, you can see very tipping point of the price at 109.5. It is down all the way down to 108.5. So you're talking 100 pip range, but it's been down ever since it hit 109.5, and it's down at 108.5 right now. I'd be looking for it to target this double. To me, I would call a little bit like a double bottom here at 108.3. So it's still got about 25 more pips to go. And then from there, break that and then come target the low price of 108 to 107.9. And that is my 4-hour selling position. And all this is happening right now. So I know some people are asking if I can go live, but I could have. But I mean, I'm just trying to do this right now so that you guys can get in and get a chance to see how I view the 4-hour charts. Looking at candlesticks, right? And how I tie the candlesticks with price action. And so if you're probably wondering what this blue line is, I'm starting to look at weekly trend lines. So this is based on the weekly. These trend lines are based on the weekly. So it looks kind of odd right now, but if I already hop into the weekly chart, you can clearly see what I'm drawing here is a weekly, right? I got a weekly trend. Weekly trend lines off the weekly charts. So I'll explain a little bit more on this setup and what I'm looking at this weekend, and how I'm starting to understand the trend line setup. So I know I talked about I didn't really want to use it, but there is a perfect combination when you're using a higher time frame, such as the weekly. The monthly gets a little bit undecisive or unpredictable at times. So you can see there's a cross here, and kind of like when the moving averages cross, and then kind of like a strong selling point. But based on consolidation, you gotta be careful. So that's also another thing. I think I have US 30 here for the uptrend. from very low here from 20,300 all the way up to the highest of 28,000. And it's still on a ascending, not descending. Ascending is up, descending is going down. So just something to think about. So, but anyway, let's go back to the 4-hour chart here. I know it wasn't so to talk too much in detail, but let's go. Let's hop in on gold. So on gold here, right? On gold, right? So this massive bull wick here. I know it's still a bearish candle, but look how perfect the weekly trend line is. Lines up with the 4-hour, and this I haven't even moved the trend line. So I show you guys the weekly chart, right? So hold on. Let me show you guys weekly chart again. Weekly chart. Look at this. Okay, still on a strong movement, right? And using this 1460 as a kind of like a pivot movement, back up to retest 1500, maybe 1520, and then shoot for a really new high price. Something to think about. Okay, so I haven't changed because all my trend lines are on the weekly chart. The reason why all my trend lines are on the weekly chart, and I'll explain that in another video. So based on the 4-hour chart, right? Because I'm talking about naked Forex, trading with 4-hour charts, and a little bit on daily, but most is going to be all on 4-hour charts on this video. So very crucial, understand you have structure and zone, 1456 and 1476. Notice that the 56 and the 76 is even numbers, and they're $20 price point at a $20 price gap. Very important to understand that when gold consolidates within $15, $20. When there's a really strong consolidation, you shouldn't be looking at the 4-hour anymore. You should look at the 15-minute or maybe the 30-minute. The reason why I hop down to the 15-minute or the 30-minute is because I'm looking for a massive breakout if it's going to consolidate within just like a $2-3 value range. I'm talking about gold here. I'm not talking about pips, right? I'm talking about if gold is consolidating from 1450 to 1453, and it's been consolidating there for like 2-3 days. Then that is something that you want to hop into a lower time frame because you want to look where it's going to break out of. Massive breakouts, right? I'm talking about bullish engulfing candles or a really strong wick, bearish wick, going down, spiking down real hard and actually closing it out outside of the zone structure. So that is something to pay attention to, especially when you look at the 4-hour, and prices are just subjective back to the same positions of the same price zones, the price ranges, and there isn't really much going on for that pair for the week. So especially for gold for this week, not a whole lot is going on. Yes, it is. I am still buying gold, and I'm still bullish on gold for this week. I'm still looking to target 1480 as my final TP. So if you don't know what TP is, it is take profit. So it's very important to understand that when you enter in position, right, and it's based on the 4-hour, and you're looking at TradingView right now, it's telling you have an hour and 7 minutes. I strongly suggest to take a look at the time, right, at the time that is left on when the 4-hour candle is going to close. If you are on Central Time, I'll make this simple. You get new 4-hour candles, 8 in the morning, 12 p.m., right, lunchtime, 4 p.m. when New York closes, let's see, 8 p.m. at night, 12 a.m. in the morning, so that's 2 hours before London. So I'm talking about 8, 12, and 4. That's every 4 hours. If you live in New York on the East Coast side, let me make this easier. You got 7 o'clock, you got 11 o'clock, and you got 3 o'clock. I was having to, yeah. And so it is very, I don't know, I'm just trying to simplify. The biggest thing is that you just got to simplify your math and calculate your math Adding and subtracting is easier than multiplying and dividing. I'll just make that easy. I'll just make that as simple as possible. Even numbers are easier to work with than odd numbers. So just something to pay attention about. Let's see. Now let's hop into, I'm going to hop into all the major pairs on the 4-hour, and I'll give you guys a little bit of my analysis on here. I'm pretty sure someone's going to ask me. Okay, so right here on the pound to the dollar, right? A lot of resistance here. Cannot even break above 130. 130 is a very strong resistance price if you go back and look at the previous resistance for the past week and the week before. So here, let me zoom out. Let me zoom out. I know it's going to be a long video, but I want you guys to understand where I'm coming from, how I'm looking at the 4-hour chart, how I'm tying this with naked Forex, and take it and learn it for yourself. Apply what you need to learn, not trying to apply everything all at once, which I do not recommend. Okay, so I'm going to zoom back up. This is still in the 4-hour chart on the pound. Resistance, right? Another set of resistance, another set, and this is a new one, and it's pretty much just below 130. Now this one did hit 130 but got rejected multiple times if you can count the wicks. So you want me to count the wicks? Let me do that for you right now. Count these wicks right here. I'm going to zoom back out. Okay, I'm talking about what happened. When was this? 2 weeks ago, or 3 weeks ago. This first wick of rejection, right? This wick, this wick, this wick, this wick. So you're talking about the first wick was this one, but you can see what I'm outlining is that the next 4 wicks was also getting rejected ever since. Like every time it hit, ever since like every time you try to hit 130, it gets sent back down. That's what I'm trying to say. Price rejection. Massive, right? You can see the massive bearish engulfing candle in the 4-hour coming down for the pound. And I'm looking to keep selling it. My initial target would be 128.8, 128.7, right around here. And then the next one would be to cover this structure here, this little structure here, down to 128.3 and 128.2. And if it keeps going, then my final target would be 127.7, right? This price right here. Notice that price is relatively pretty much even numbers, right? Pretty much even numbers. Like ends up in being zeros here, or the 128. I mean, I'm just breaking it down almost what, every 50, 60 pips. And so, and you can see the rejection of where it started was at 129.7. And notice that from 129.7 and all the way down to this bottom price of 127.7, that's 2,000 pips. That's even numbers again. So it's easier to work with even numbers. Now, I don't talk a lot about what numbers you should look for in price action, but I'm giving you a big tip right now is to look at even numbers and look at where price is at the highest and at the lowest and subtract those two. Most of the time it's even numbers. So very, very important that why would banks, work something out on the even side than the odd side? So it's just something to think about. Let's go into the euro to the dollar. So coming back down here, euro is not as weak as the pound. So I'd be looking to buy euro GBP instead. I'm not going to show that chart. So you can see the rejection here, and then another another bearish candle. I'm looking for another sell, another bearish candle close down, right? And I would be looking for the 110.5, right? Breaking down here, there's no other support. If it breaks that, then I'm looking for 110.2, and then the final one be 110. And the rejection was at the very top, right around here, almost at 111. So breaking it down, simple math, right? And so, and it's sitting at 110.6 right now, and it's trying to come back to 110.7. So that is what that is what I'm looking at right now for euro to the dollar. So that's as easy as I can say it for you. That's as easy as the way I can just pop it down right there for you guys. USD Swiss, looking to buy USD Swiss, even though it hasn't been doing much. But I'll be looking to buy. I'm looking for some kind of massive move back up here to the wick at 199.35. And then here at 99.5. And then at the very top, 99.75. And so I don't know what I want to say here. I don't know. I'm just basically just repeating the same thing. So I'm just not going to repeat the same thing what I just said and what I said in the other pairs. So I'm going to come back, right? So I'm going to come back here. Let's go use the CAD. Bearish engulfing candle. It is not correlating with the US dollar. So we look at the US dollar at the DXY. DXY it has a bull candle, right? USD CAD on the other hand has a bearish engulfing candle, right? Massive move on the sell here. So I'd be looking to sell USD CAD, and since there's no support here and it's coming down to test this one, then my 4-hour price test again would be here at 132, and that'd be a 70 pip range. But it came all the way up to 130, 32, oh 33.2, and so you're talking about 120 pips. Yeah, no, 1200. Well, why am I having math problems here? 1200 pips, yeah, 1200 pips. So 1200 pips. So, and that would be the main structure that I'd be targeting at. And then if you really want to get, like I said, if you really want to look at a massive move, look at the daily, and you can see that UC CAD. Now I'm showing you guys the daily chart here. Very crucial to understand where the daily candles are pinpointing for you. Okay, notice that there's a lot of resistance here at the same price at 133.4. Notice that USD CAD is been rejected twice already at 133.2. Just 20 pips below. Yeah, just 20 pips below the 133.4. And it got rejected twice at 133.2. So you gotta be very careful if you plan on buying this. If you're using, let's just say you decide that, oh yeah, I'm using a trend line and it's still going up, so I'm gonna keep buying it. You gotta understand that this is why I don't like using trend lines too, because I get caught up on using certain time frames on trend lines. That's why I hate talking. That's why I don't like talking. On the weekly, I will explain why I love the weekly trend lines. I'll explain that this weekend. So looking at the close, right? So if the daily candle is going to close as a bear candle and it's creating a new line of resistance at the 132, pretty much at 133, right? The candles that are closing here. Then I'm looking for a strong sell. And then I would look for a new leg to come down, to retest 130 one more time to see if it's going to bounce back up. And then there's your W, guys. That's it. There's your W. M's and W, guys, from the market maker method. So you want to pinpoint, right? Pinpoint price. Well, I mean, the structure, price, and where the next formation of candles is going to create, right? And then draw it out. This is what I did on the line. That way you have a good anticipation and you have a very good, I don't want to say, a good foundation of where you're going for the week, and that you're thinking ahead of the game, and that you're constantly, adapting when the markets are not going, or when the markets do decide to be on an unexpected fundamental play. So that's another thing too. And then New Zealand. So I'll go into here, right? It is still, I would sell New Zealand because of the fact it got rejected here. Where is it? 64.3, and did not try and break the 64.4. You can see the wicks, okay, here. And then I would look, my first initial target would be the support candles here at 64 cents. And then come down to 63.8. And then come down to 63.7. And this is all on the 4-hour. Now, if you look at the daily, let me show you guys the daily on New Zealand. There's not so much going on, but you can clearly see that there's a lot of resistance here previously, right? So looking for a strong sell. And my first initial target would be 63.5 and then 63 cents. You always got to look at how strong resistance is and where price is being retested again and getting rejected. Retest, rejection. Anytime a price is retesting a new low, I mean the same low or the same high, could be off the 4-hour, could be off the daily, but usually I look at the daily highs and daily lows. Is that if it's not going to break through, it's just going to create support, right? If it's not going to break through, then it's going to create resistance or support. That's what it's coming down to. I mean, let's go into Australia. Same thing, right? Australia is weaker, so the Aussie dollar is a lot weaker. And you can clearly see that it hasn't been retesting anything higher ever since it hit 69.2. Now, this is the Australian to the US dollar on the daily chart, right? From 69.2, and it already broke down the 68 price. So I'd be looking to keep selling it, and I would target, 67.6 and 67.4 first, right? This little price structure zone here. And if it all breaks through, then 67 cents would be the next target. But that's on the daily chart. Now, so let's go back to the 4-hour, and you can see that it's having a massive move going back down again. And if I sell it, obviously I would sell it if we're to break 67, what I said, 67.8, 67.7, right here, because that's where it bounced off of first. Once it breaches this, then come target 67.6, and then 67.3 and 67.2. So on the daily, I'm shooting for more pips and more profit because it's a bigger candle. Unless there's consolidation, and if there is consolidation, then guess what? If there is consolidation, okay, let me just, I know some people are gonna ask about consolidation. Oh, I'm looking at the 4-hour, I'm looking at daily, but nothing's much going on. But you were talking about in the video about the 4-hour. Well, guess what? What I just said in the first 5 minutes, I said that if there is consolidation, for me, I would hop back down to the 15-minute or the 30-minute chart because I'm looking for the zone to get breaking out of the zone, right? I'm looking for a massive bearish engulfing candle to break out of the structure. You have to look for candles to break out of the structure. Without that, then looking at the 4-hour and the daily isn't going to do anything. Anytime if I see consolidation, I'm gonna make a quick, simple video on consolidation. Is that I'm going straight down to the lower time frames, 15-minute, 30-minute, maybe sometimes a 5-minute, but the 15-minute you can break it down with the 15-minute pretty good. the 30-minute kind of offsets with the 1 hour, so I just go from 15 minutes to 1 hour. But by looking at that time frame, you want to pinpoint where candles are just bouncing in a range, right? Whether it could be a 50 pip range or even the 100 pip range. There's not much going on, but it's been doing that for a couple of days. And if it's going to keep doing that, then you got to be careful, especially if you're trying to hold a position out. So you got to be ready when you anticipate so much that when it doesn't go the way you anticipate, then you have to be prepared to take the loss and move where it's going to go. So don't be like, oh, I'm going to hold it. Okay, I'm going to leave it this. Don't be like, me 2 years ago, but oh, I'm going to hold it because I think it's going to come back. Not a good idea. There are certain times that you can hold a negative position and it can bounce back to be positive, but that requires a lot of focus and patience, but emotional intelligence needs to be there. And so I will make a separate, I got a lot of topics that I need to bring up for myself to talk here on YouTube for you guys, but I'll leave it at that. And so I hope this video makes sense. Mostly on the 4 hour, a little bit on the daily at the end, but mostly on the 4 hour. And so stay tuned for this weekend on talking about, it wasn't consolidation. Crap, I said I was going to talk about something. Oh, I can go back. But stay tuned for this weekend's video. That's it, guys.